Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. So, a lot of big news out of China and the tech industry this week as DeepSeek's AI model shocked US tech stocks. We will discuss that. And also, Fed meeting this week. Not a surprise, they paused, not expected to cut until June. We will discuss why. And then markets still near their all-time highs, yet we did see a large pickup in bearish inverse ETF flows during this week after that news out of China. All right, so first we have charts of the returns for the Mag 7 stocks from last Friday's close through Thursday's close. And you can see NVIDIA was hit significantly, down nearly 13%. The overall Mag 7 was down about 1% because these companies are a little more diversified than a lot of people tend to think they are. And I think there was actually some winners from some of this news across these companies. You can see Meta and Apple obviously reporting earnings as well, up between 6 and 7% this week. And the overall Magnificent Seven only down 1%, even though NVIDIA was down 13% overall. Let's talk about why. So, what do we know? Well, DeepSeek is a startup company in China, developed an AI model that was released its latest version over the weekend. It was the most downloaded app on the Apple iPhone App Store. So a lot of people using it, perhaps now a very big competitor for ChatGPT, which is owned by Microsoft. And the big news, as reported, and I say reported because this is what DeepSeek is telling everybody. Nobody actually knows all the details right now. All they know is it's performing on par or better than the US models. And they're saying it cost a fraction of the cost, about $6 million to run this machine. We don't actually have information about how much it cost them to train the model, but the headlines are that the Chinese startup was able to produce on par or outperforming AI model for the fraction of the cost. And remember, Chinese companies were not allowed to use the most powerful semiconductor chips produced by US companies, most notably NVIDIA. So they were using, as reported, again, I keep using the word because this is what we're being told, they're using older, less powerful NVIDIA chips. Once thought to be a requirement for cutting edge AI was the most powerful chips by AI. So this is big news for the industry, that perhaps an open source, which is good news, an open source AI model developed with less powerful semiconductor chips could drive the cost down of those models. It does call into question the amount of money in capital expenditures by companies like Microsoft and NVIDIA in preparation for this AI boom. But for users, you think Meta, Apple, maybe Amazon, Tesla, they haven't put nearly as much money into this area. And to the extent that technology comes down, I think you're going to see winners across other industries as we naturally see from other technologies throughout history. Now, the Fed also had a meeting this week. They did pause the Fed funds rate and stayed at that range of 4.25 to 4.5%. That was widely expected. If we take a look at this chart on the screen, the number of 25 basis point cuts priced in by the end of 2025, this is based on market transactions within the Fed fund futures market and tells us what the market is expecting. You can see just in the fourth quarter, early fourth quarter, the market was expecting 8 to 10 rate cuts between then and the end of 2025. We did start to receive some Fed fund cuts during the fourth quarter, but the other news and why expectations have dropped so dramatically is that growth has exceeded expectations. We just received the GDP report at 2.3%. That's much higher than the Fed was expecting at the beginning of last year. We did have some softening labor market data during the summer, which made people think perhaps the Fed was going to cut even quicker. While we received a little bit better growth and inflation data higher than perhaps expected during the fourth quarter, and that shifted expectations to the Fed not cutting as much and pausing right now. I will say these numbers, not expected to cut till June, maybe not even one more cut the rest of the year. These expectations are very volatile, as you can see by the chart, just a trailing 12 months chart. I would expect these to change as new data comes out. So I wouldn't put too much information to this other than to say this is what the market's expectations are. And to the extent those are changed, we're going to see other parts of the capital markets impacted like stocks and bonds. Finally, markets kind of taking this DeepSeek news in stride for the most part. Although I will say there's a bit of fear and I'm feeling a little bit of panic anecdotally, but even quantitatively. Take a look, S&P 500, only about 1% off of its all-time closing high. And during the midst of the concern and the news around DeepSeek and obviously the volatility in the tech and semiconductor industry within the US, we saw a huge pickup in inverse ETF volume. And for those of you that are unfamiliar, these are bearish ETFs where people buy these ETFs and they are profitable when the market decreases in value. So it's a bearish bet. And we saw the largest dollar volume going into these bearish ETFs since August, the last time we had about a 9 or 10% pullback in the S&P 500. If you look back over the past few years, these spikes in bearish volume have also coincided with short-term market bottoms. So there's an old saying that says markets climb that wall of worry. I think with where price is at, this type of skepticism perhaps says that right now we're getting some fear and some volatility into the market, but I don't necessarily think that is actually a bad thing right now. We've seen these come in clusters before, but that overall pessimism, not necessarily a bad thing, especially when you look at price relative to the overall long-term uptrend. So finally, we have the Super Bowl coming up soon. And on the heels, the Eagles are going to play the Chiefs. The Eagles just beat the Washington Commanders over the weekend. But one of the big parts of news was A.J. Brown, the star receiver for the Eagles, was caught reading a book on the sidelines. At first, people were saying, hey, how focused is A.J. Brown? He came out and said, no, no, no. This is a self-help book, a motivational, inspirational book that I read. It's called Inner Excellence. I use it to stay focused during the game. I've done it before. And everybody said, okay, okay. But one person that didn't say okay were people that were watching and were interested in that book, Inner Excellence. Before on last Friday, before that weekend, that book was ranked below 500,000th on the list of best-selling books of Amazon. It went all the way back up to #1 on Monday morning. So that book was written by Jim Murphy, was not a popular self-help book. So he might be sending a little check or a thank you note to AJ Brown soon because that climbed to #1 on the Amazon charts. I believe the author said the highest it had ever been since he released it years ago was like 8 or 9,000. So big jump, kind of interesting news over the weekend. All right, with that, I want to thank everyone for watching, and I'll talk to you next time.